In this video we will learn about IAS 1. Presentation of financial statements. Bear in mind, IAS 1 will be replaced by IFRS 18 from January 2027. Overview of IAS 1. Presentation of financial statements is a fundamental international accounting standard that sets out the overall requirements for financial statements, including their structure, minimum content, and overarching concepts. Key objective of IAS 1 is to ensure comparability, clarity, and reliability of financial statements across entities. It provides a true and fair view of an entity's financial position, performance, and cash flows. Let's have a look at its main requirements. At number 1 we have components of financial statements. Components of financial statements are 1. Statement of financial position. 2. Statement of profit or loss and other comprehensive income. 3. Statement of changes in equity. 4. Statement of cash flows. 5. Notes, including accounting policies and explanatory details. Requirement number 2 is fair presentation and compliance with IFRS. It states that financial statements must faithfully represent transactions, provide a true and fair view, override IFRS only in extremely rare cases. In doing so, they must disclose if management concludes compliance is misleading. Third requirement is going concern assumption. It means the entity will continue operating if management intends to liquidate or cease operations. They must disclose basis for non-going concern and liquidation plans. At 4 we have accrual basis of accounting, which means recognize transactions when they occur, not just when cash is received or paid. Number 5 is materiality and aggregation. Present separately material items. Immaterial items can be aggregated. In simple words, omit immaterial items and highlight material ones separately. At 6 we have comparative information. Prior year data must be included for all amounts. Exceptions only if IFRS permits. For example, change in accounting policy. IAS practical implications. It ensures transparency for investors, reduces manipulation risks, facilitates cross-border comparisons. Summary of today's topic. 1. IAS 1 standardizes financial statement structure. 2. Requires fair presentation, going concern, and accrual accounting. 3. Enhances comparability globally. If you have any question about IAS 1, ask me in the comments section.